Welcome to our video on the accounting cycle. Today we're diving into the essential steps of the accounting cycle, how they work manually, and how they differ when using a computerized bookkeeping system. The accounting cycle is the backbone of financial management, ensuring accuracy in financial reporting. It consists of several key steps that we'll explore together. First up, we have transaction identification, where every business transaction is identified and documented. In a manual system, you would record these transactions using ledger books or journals. It's time-consuming and requires meticulous attention to detail. Moving on, we have the preparation of journal entries. Manually, entries are recorded by hand in a journal, noting every detail of the transaction, making errors a common occurrence. After journalizing, we proceed to posting entries to the ledger. In a manual setup, this means transferring data from the journal to ledger accounts by hand, a labor-intensive process. Next, the unadjusted trial balance is prepared. This step checks the accuracy of the ledger balances. Manually, this involves adding up debits and credits to ensure they balance, which can be cumbersome. The following step is adjusting entries. With manual systems, you have to calculate and record these by hand, often at the end of an accounting period, which is prone to errors. Then, we prepare the adjusted trial balance, ensuring everything balances out after adjustments. Now, let's talk about financial statements, essential for business decisions. In a manual environment, this involves creating statements like the income statement and balance sheet using the trial balances, a process that demands precision and experience. Finally, closing the books marks the end of the cycle, resetting revenue and expense accounts to zero. Manually, this requires additional calculations and postings. A computerized bookkeeping system, however, automates much of these processes. Transactions are entered into the system, which then updates journals and ledgers automatically. Adjusting entries, trial balances, and financial statements are generated seamlessly, reducing errors and saving time. In summary, while manual systems are hands-on and require careful attention at every phase, computerized systems streamline the process, enhancing accuracy and efficiency. You be the judge. Which system is best?